right, so we have the newest U.S. Bureau of Labor Statistics weekly unemployment filings are out. So we're going to be able, now we have a lot of data, we're going to be able to start comparing and contrasting. So this first graph, the chart that's going to come across, we have two different sets of numbers. The numbers on the bottom, those are the raw number of unemployment filings per week. The green on top is the accumulative filings. All right, so we can see that the newest number that came in, 2.1 million earlier this morning. We're continuing to see the downward trend in new unemployment filings. If we check out the green, we can see that we have largely started to taper off also in the total number of filings. All right, so this is kind of a bigger picture view of what's going on. All right, now when we take a complete look at all the unemployment numbers, we're going to get a little bit of an interesting picture here. So the dark blue is going to be the cumulative new filings. The light blue is going to be the current people collecting unemployment insurance. All right, so what we have, looking at, Mark, can you hit the mute button on yours real quick?
Sure.
All right, thank you. All right, I was getting a little bit of feedback there. All right, so here's what we have. We have the cumulative new filings, right, starting from March 21st all the way through the most recent report. And we can see that the numbers 3.3 to 10.2 million people unemployed, 16.8, 22. We're at 40.7 million people that don't have a job, all right? When we compare that, though, to the light blue, these are the people that are currently collecting. So we do see that on the week of May 9th, we hit our peak with the people that are actually collecting the unemployment benefits. We can see that as of the week of May 16th, that started to decrease. The number from this week has not been released yet. So what we can see here is that we are now starting onto what appears to be the downward trend. People are starting to go back to work. Now, there's a lot of different numbers that that's being put into this. This isn't just simply the delta between, let's say, 38.6 million and 21.1 million. It's not simply saying that 17.5 million people have gone back to work. There's a lot that's going into this. All right, and part of this is going to be relayed to us here in the BECKER-FRIEDMAN Institute of Economics study out of the University of Chicago. Some very, very interesting data here. 68% of the unemployed workers who are eligible for unemployment insurance will receive benefits that exceed their lost earnings. That means they just got a pay raise. 20% of the eligible unemployed workers will receive benefits at least 2 times as large as their lost earnings. So we have 88% of the people that are on unemployment have received a raise because of it. That is not a good situation. The CARES Act actually provides income expansion rather than the replacement for most unemployed workers. Here's a quote from Lisa Yang, Goldman Sachs equity analyst. The current crisis will accelerate the shift from offline to online music, resulting in an almost quadrupling of streaming revenue by 2030 from 20 billion to 75 billion. What that means is businesses are actively working to reevaluate and recreate themselves as this economy continues to shift. It's continuing to drop. We're seeing the unemployment, but we're also seeing businesses coming back to life. Right? So this is another interesting data point. Right? So when is the economy going to recover? Right? If we're going to take a look at a couple quotes from Chris Hizzy, Chief Investment Officer for Merrill Lynch, right? Weekly jobless claims released May 21, so that was a week ago, total nearly 2.4 million, yet continuing claims workers already unemployed are receiving ongoing benefits have leveled off. That means workers are coming back into the economy, whether temporary or full-time, are at the same levels as those going out. That was as of last week. That's a very important data point right there, ladies and gentlemen. All right, the next one, we fully expect the economy could begin to pick up in late June or July with a strong recovery into the fourth quarter. All right, remember, January, February, March, Q1, April, May, June, Q2, right? So they're saying they might start to see this V-shaped recovery as early as the very end of Q2. July is the beginning of Q3. More good news. All right, when we take a look at the GDP graph, so this is the one that we have been showing for the entire time we've been doing the show. All I've done now is simply pulled out the Q1 and the Q2. So these are looking at the projections for Q3 and for Q4. Right? So these are the 5 main financial houses: Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo, Bank of America. They are all more or less in agreement. The only one who's disagreeing with an increase in GDP in Q3 is Bank of America. All 5 agree that it is going to have a nice solid increase in Q4. Bank of America is actually predicting the largest of the increases in GDP, where they were predicting a slightly negative in Q3. So when you have all of the major financial institutions, when you have Merrill Lynch, when you have the Wall Street Journal, all in agreement, that's a wonderful sign. All right. So here's the Wall Street Journal survey of economists. Right. This was how quickly do you think we're going to recover? All right. So 3.3% said in Q2 of this year. Okay. That would be wonderful. 65.6% said in Q3, 19.7% in Q4, and you can see the rest rolling out. 85.3% of the economists that were surveyed believe that the recovery is going to start the beginning of the second half of 2020. That's what we're looking at. More great news. All right. So when we take a look at the Federal Reserve banks, their May report, 75% of the job losses are either temporary layoffs or furloughs, according to employers. The result aligns with news reports of large-scale hirings at firms like Amazon, Walmart, CVS, healthcare, Domino's Pizza, etc., other companies that are seeing a major increase in demand in reaction to this pandemic and the partial shutdown. Why retail could actually see a V-shaped recovery after all? That was the big question mark. What's retail going to do? How soon can people go back to stores? How comfortable are they going to be? With what we've seen over the last week or two, now the V-shaped recovery specific to retail is starting to come into play.